FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome back, financialsurvivalnetwork.com. We've got Gordon T. Long on the line with us now. We're doing something a little different this time. We're going to do a tour of the world with the one goal in mind to figure out who's going to blow up first. Gordon, welcome back.
Thank you, Kerry. It's always nice to be here.
Hey, so
enjoy our conversations.
Likewise, of course. So we're going to do a little tour of the world, and with the one goal in mind, figuring out who is going to blow up first. So let's start away from the U.S. as far as we can get. China, Australia. Let's start with China. Little bank runs going on there. What does it mean?
China is a phenomenal success story on the surface, Kerry. But when you start to peel that onion, it is very, very troubling. And what it goes right down to is what I'll refer to as their shadow banking system, and really the explosion in credit. And as bad as our story has been, or as great as the credit creation's been in the States, it pales in comparison to what's going on and happened in China. And the amount of debt is one issue. What corporations are paying for that debt is another. The collateral that stands behind it, and it's starting to fracture, and it's becoming. And they've been slowly, but they were bailing out a lot of these players, but now they're letting them go. Two of the steel companies here in the last 2 weeks. So China has got to slow this mechanism, but I think they're realizing. I know they're realizing that they had no full appreciation of the magnitude of it, and it gets into. They were using copper, aluminum, zinc, all of the base metals. There were a lot of places stockpiling because they were using those for collateral to borrow more money. So it's just pyramided right up. And all it takes is a slowing economy, which is happening. And the exports are definitely falling off as a reflection around the world. And then it's the same problem. Does that sound familiar, what happened to us in the housing market?
It sounds like Yogi Berra would say deja vu all over again, right?
Yeah, but your question is what's going to blow up first. So their clock is ticking in China. There's no question about it. But will they be the first? Because, you just go across the water and you got Abenomics going in Japan, and the biggest debtor in the world is Japan. And if they ever get their inflation to the rate that they want, it's impossible for them to pay the debt on it. And Abenomics is not working. The current account's getting worse. The only thing they're doing is being successful at is printing money. And when they bring in the new tax here this month, and it starts to hit the revenues, that's going to trip things up. So it's a race, and I think Japan actually is in worse shape. But it spills over because right now it's the Kerry trade that's from Japan that is really keeping a lot of the liquidity going. Richard Duncan, partner of mine, we do a lot of work on international flows of checking the rate of credit growth because it's a liquidity market we in. Fundamentals now don't mean anything. It's the rate of the flows and the increase in the first derivative of it. And we see a second half this year, major global liquidity squeeze. It's still there, but just not enough of a rate. And so this Japanese money, they're going to have to accelerate the printing, which compounds the problem. So Europe, ECB. Right now, it's their turn to ante with quantitative easing, and as you're well aware, Kerry, they can't because of the various the restrictions, the charter, the mandate the ECB has. But it looks like they're about to announce something here, maybe the April 3rd meeting. But Draghi is, he's sitting there. They went through 6 recessions. They're just barely out of one, if you can believe the numbers, but look like they're going right back in. And he's got to do something. And he's been sending a lot of signals that he wants the euro down in price, and that he's going to buy assets, but he can't buy country assets. So what's he going to buy? And it looks like what they're going to do is they're going to buy U.S. treasuries. U.S. treasuries. Isn't that amazing? Because right now, China's not buying our treasuries. Japan, or rather Russia's not. The only treasuries we were in the last TIX report was out of Belgium. They're the country that's got the money to support the U.S. government.
Yeah, I got a kick out of that. Did you get a kick out of that?
Oh, busted me right up. It was $100 billion. Clearly, to me, that's ECB money that's coming in, or we would be in a serious knot right now. And that's Russia and China putting us into that position. So I think that there's some pretty noted people here at Harvard that have been advising on this, that in fact Frankel's got a paper out on it too. They're down to the mechanics of how this might happen, not whether it should happen. So if they do that, and there's some pressures because of what's going on in the Ukraine and Russia and the petrodollar, never mind our own U.S. funding, it would drive the euro down, which is what they need in Europe. It would increase liquidity. It would certainly help us in the United States. But that shows you, I'll use the word, the desperation that's going on in Europe. So, they all play, I guess, Kerry, they all play off each other. And we're also integrated, and they're also tied together. The problem that's really troubling, and maybe we'll answer the riddle, is who's first, goes back to what's happening in the Ukraine right now. And the whole movement of gas and oil. And, as you well know, Russia's a major supplier of gas and oil through the Ukraine as a choke point into Europe. A lot of the Middle East is about gas pipelines, not oil, but gas in the form of liquid natural gas, and whether they can go to a pipeline, which is cheaper. So the point here is that if this blows up the way, I think that Russia is going to, and they've already struck agreements with China and India and the rest of the BRIC countries on oil, but gas is the big one, and it looks like they're ready to ink a deal here in May. And if they say we're going to transact it in not U.S. dollars, and we're going to use any currency but the U.S. dollars as a group, do you understand the significance of that in this whole little equation?
Oh yeah, and it looks like that's where we're heading, doesn't it? It
does, because if you look at the gold accumulation that the BRICS have been acquiring. It's been stunning. So I'm not suggesting they'll gold back it, but that they would be in a position between the trade, because the emerging markets now are the dominant 75% of the world trade, over 60%, and so they can be a lot more self-sufficient. And the United States, with tapering and the problems we've been creating with our printing and flooding the world with money, it's not just ourselves, but most of the developed countries, they've had no answer to it. The emerging markets, they've just been the recipients of it, and they're frustrated, they're angry, and they're about to take action. And the Ukraine may be the tipping point, where you just pushed them a little too far, and Putin says, "Okay, I'm not going to put up with this sanction. I don't need to." And I'm not trying to sound pro-Russian here at all, but I don't think they're being naive at all to what their game plan is. Yeah. We may be being naive to the magnitude of the problem, because Putin was quite clear that he doesn't believe we're the power that we once were.
Yeah, and it's just like him to test it.
Exactly the point, just to see what'll happen from it. So even some rumors and ripplings of this, you don't know which shore of those countries it's going to wash ashore at, but I think one thing we do know, that the next 14 to 18 months are going to be very challenging on a global basis. And as your show, Financial Survival Network, I think this is very appropriate right now to being very very prudent, and being prepared for some difficult disruptives, because you're seeing things like cyber warfare going in the Ukraine. The ATMs shut down. We had shock and awe during the Iraqi war. Right now, the new word is out of service, or denial of service. So you suddenly go to whatever service, include the internet, and it's down, and you don't even know why it's down or who took it down, or and so all of the things that you were dependent on, you can't operate. And so we're seeing that just spilling over. And just think of that on the complexity and fragility we have now on a global basis. the kind of contagion that could happen so quickly that we wouldn't even know where to start to solve the problem.
Hey, and, you've heard about vulnerabilities of the electrical grid, and you've heard about all these retailers getting hit, Target, Neiman Marcus, and a host of others. I saw myself, my Amex card got breached, and Amex didn't even pick it up. I only picked it up because I was trying to make a legitimate charge, and they denied it. So I went and I looked. I said, holy geez, I got this charge from Best Buy, and it's not one that I made. I couldn't believe it. Called them up, and then they immediately sent me out a new card. And now whenever a charge is made on that credit card, I get an email if the card wasn't physically presented. So you're seeing a lot of this cyber warfare, if it is indeed cyber warfare, taking place. But whether it's cyber terrorism or whatever, that's happening in the Ukraine now, can't be denied. So I want to talk more about this up next and the steps that you can take to protect yourself. On the Financial Survival Network, we're speaking with Gordon T. Long.
FSN Radio.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We too share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments, and we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's hiddensecrets1.info.
The Financial Survival Network. It's all about what's next.
And we're back on the Financial Survival Network with Gordon T. Long. So, Gordon, what do you do to protect yourself? The obvious answers, to my mind, which I've done already, gold and silver. What else can you do? Do you buy foreign currencies? I mean, it seems like which one of those are going to blow up next as well?
Exactly, Kerry. There's no easy answer to this one because everybody's different. Their risk tolerances are different. Their position they are in their life, how much cash they need. But it starts with you need to make sure that whatever your wealth is in, it's a store of wealth. And right now, paper currency is no longer a store of wealth, especially at the rate it's being debased. So you've got to put it into something that is real wealth. And so the question is, well, what is real wealth? Well, certainly gold and silver, without question, have always been, and I believe always will be, real wealth and real money for that matter. But it's like anything. You've got to be diversified because gold may go up. You really haven't made any money, as you know, Kerry. All you've done is you've protected the value of your wealth. But it's my opinion that you'll see the government, as soon as it starts to really move, and it will, that is coming. When that moves, the government will step in, and the taxes that'll be on it will be just horrendous. And so you potentially could be worse off. So it says, well, how are you going to protect yourself against taxes that you don't even know how they're going to implement or what they're going to do? And it's not like you can go offshore anymore because of what they're doing law. So you really have to look at, and I'm not saying not to be in gold and silver. And if I am, I'm saying be in physical, but you need to be balanced. You need to spread it out, but get back to where what value is and what wealth is. And to me, Kerry, what it is free discounted cash flow. In other words, going forward, it's cash flow unencumbered that's coming in that will appreciate with whatever the value of the currency is as is being debased or whatever. So where are you going to find something that will generate cash flow for you? Because if you do, that in fact is the real value. Farmland for many years has been a classic way, besides gold and silver to store and acquire, because it's productive land, but at the same time it'll always float. And especially now, we're having real food shortages showing up in dairy and right around the world. It's really starting to climb in to a lot of the emerging markets' inflation indicators. Not yet as bad in America, but it's coming. And land is become the premium. But there's been so many people hard at that game here for quite some time, Kerry. And I mean, I can go on, but the key is to look at where it's not about making money. It's about protecting that value and store of that money. And if you take that concept of free discounted cash flow and you look for that, it'll start to allow you to zoom in on it.
Yeah, Jim Rickards, it's got a new book coming out called The Death of Money. He foresees big inflation because the U.S. dollar's buying power is going to shrink. He says, imagine gas at $20 a gallon and bread at $10. And he's saying price of gold going to $7,000 or $9,000 an ounce. Dollar going to collapse to 80 or 90% or more. And I mean, imagine that.
No, I think he's just trying not to scare people.
Yeah. Well, I'm not scared.
I don't mean to be facetious. I mean, some of those numbers, I think he might be a little conservative on. $20. I was just in Paris and I was paying $12 a gallon today without any kind of crisis going on.
Yeah.
So it's all, some of this stuff is relative, and I think that gold to $7,000 an ounce is probably we shouldn't be too far. We shouldn't be too far from it now if we were properly pricing it, but it won't be, and it'll take, in terms of physical, not the paper, but it'll take a crisis for it to start to correct on those numbers. But it's coming because on that point, the dollar itself is so valued right now, and look at the service industry here in the United States. Kerry, just to show how blatant it is. It used to be if you had a problem, your shoes, you took them in a cobbler and you repaired it. If your dishwasher broke down, somebody came in and you had it. You don't do anything. That's gone. Nobody. The kids they look at you like, what are you talking about? You just get a new one. Mm-hmm. So, and it's because it's cheaper to get a new one than it is the labor for somebody to fix it or to have the parts. And the reason it's that way is because the Chinese, the Asians, their mercantile strategy of putting their money back, the money they get back into our bonds, have driven our interest rates down and allowed us to consume and have a 70% consumption economy to a large degree. So it's driven out industry after industry because that currency, now if the currency was 60% less, all of a sudden you wouldn't be throwing something away, you'd be fixing it. Think of the labor and the work that would come back in. So I'm not trying to espouse that that's what needs to be done. I'm just trying to show you the damage that's been done in currency competitively against the United States. Mm-hmm. And we've espoused, no, we want a strong currency. No, you want a correctly valued currency. And so the distortions are completely out of line. So that's why you have a 70% consumption economy compared to a 30% consumption economy. And when jobs aren't there and it slows down, as we're seeing, what would you expect? I think we have peak consumption in the United States, by the way.
Yeah, so it's only going to go down from here. When that dishwasher cost $5,000 instead of $800 or $1,000, all of a sudden, when that little spring breaks,
you'll be spending an afternoon looking for the spring, never mind calling somebody in, because it's worth your time and energy to do it.
You know what? An image just went through my mind, Gordon, when cars started selling and they'd break. The guy would take off his jacket, his suit jacket. That's what everybody wore back then. Roll up his sleeves, get out the paper clips, the bobby pins, and the chewing gum, and he'd get that thing to work. There was these cars didn't go to the junk heap. And look at Cuba. Those cars, right? Revolution in Cuba, I think it was 59. And they've been making those cars work for the past 55 years. All of those cars, they still have the same cars. And it's a miracle the way those cars lasted. And you know what? Maybe in 50 years from now, we'll see all these cars that are on the road now in the United States still be on the road in 50 years from now because they will be forced to make them work, and the junkyards will be empty other than cars being cannibalized to keep the existing rolling stock on the highways in the United States.
You know, Kerry, on the cars, I the other day, we were in a mall and I was walking with my wife, and there was a huge Dollar Tree store in this complex. And as we were walking across, all the people who were pulling in were going into the Dollar Tree, weren't going to the other side of the mall. But I noticed that they were all driving new cars, brand new cars, and the people that were getting out, it looked like they were from the lower end of the economic scale. I just for whatever reason, I just sensed that, and I said to my wife, I says, how can they afford to? I think it was really what they were bringing out. They were bringing out the basics of life. That was really what triggered it. You know, just in a Dollar Tree store, they were bringing out food items that they could get. So I said, how can they all be driving new cars? Because they were just all brand new cars. And she looked at me. She said, well, that's all they can afford.
That's all they can afford.
and I looked at it and I said, pardon, I'm missing something here. What do you mean that's all they can afford? She says, well, they have to have a new one because of the maintenance costs. If it breaks down or tires or anything else, they can't. They've got to have a new car. And I still don't get it. So I'm looking at it. I says, I don't get. So where do they get the money for the new car? My wife is in the healthcare field, so she's dealing with hospitals, nursing homes all the time. So she sees this problem in spades. So to her, it was like, you don't seem to get it. And she says, it's because you can get that car for $199 a month.
No money down. No
money down. As long as you have food stamp coupons that you can show them, you'll get that car, no money down, and you'll drive off the lot. And I says, how can the companies afford to do it? She says, well, the trick is, it used to be, you know, if you got a car, you could only do 12 or 15,000 miles a year. Now it's much, much lower. She says, so they have a big problem. People can't come to work because they're out of miles on their car, and the premiums that they have to pay are through the roof.
Ah, I see. Uh-huh.
So, yeah, exactly. It's this kind of small print that's going on. And if you look at credit in America right now, it's exploded, but it's only two things, government funded, but it's two things. It's student loans, and look at the fraudulent activities that are going on there, and the default rate, and car loans. And car loans, it isn't big fancy cars necessarily. It's people who just simply can't afford the maintenance on it.
Mm-hmm.
And I could bore you with other examples, but it goes right back to our point. So here's a big ticket item like a car, whereas we can't afford to have it maintenance. Why is that? Try and find a service station today where it used to be when I grew up, there was one in every corner pumping gas and repairing cars. Try and find one today.
Can't afford not to buy a new car. So I guess the U.S. is in a race with the rest of the world, and take your pick which one's going to collapse first. But the U.S. is well on its way. Gordon, tell us where we find you, get your publications.
Appreciate that, Kerry. Yes, GordonTLong.com. Also, by the same name, we have a macro, a YouTube channel, and we do a lot of trading and technical analysis at triggers.ca.
Triggers.ca, and link to that site in the show notes to this interview on financialsurvivalnetwork.com. Don't forget to subscribe to the newsletter. Gordon, always a pleasure. Talk to you again real soon.
You bet. Thank you very much, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.